Hi, everybody. I'm expecting more people to come in. Oh, I don't have to yell. I don't have to yell. Okay. I'm expecting more people to come in. There's supposed to be 20. I know it's kind of traffic-y out there. It's a long walk from the parking garage. People get lost. It's a big building now. So I'm going to start, but I'm going to go a little bit easy here in the beginning. So I am Diane Haggerty. I am an enrolled agent. My office is now in Springdale. Your notes say probably I'm in Fayetteville, but I'm actually in Springdale, downtown, right by Emma, if you ever need to see me. People always ask me, what are you doing here? Why do you do this class? I've helped over 100 people, probably close to 200 people start their business, set up LLCs, set up nonprofits, and get you rolling in that direction. So if you want to be in business, I'm the one you want to talk to. So I've been self-employed. I can't remember the last time I had a job. A long time. I've been self-employed most of my life. Come on in. Have a seat. I can't teach you a semester of accounting in an hour, hour and a half. There's no way I can teach you everything you need to know. Absolutely no way. I'm going to do my best. I'm going to go fast. We are going to talk about, let's see, hopefully we have the right, I got a clicker. Okay. Good, now I don't have to do this. I can stick my slides here. Here we go. We're going to talk about, oh good, they got the right slides. Okay, so we're going to talk about business structure, like how to set up LLCs or not an LLC or corporations. We're going to talk about that. We're going to talk about records, record keeping, like bookkeeping. Okay. We're going to talk about pricing. I know, how many of you here are from Maker to Market and make a product? 1, 2, 3, 4, about half. Okay, and the other half of you, I'm assuming, do some kind of service, right? Okay, so I got to keep it split. This was originally for Maker to Market, so we talk about product pricing a little bit. Come on in, come on in, come on in. Have a seat. There's plenty of room up front. Nobody seems to want to sit in the front row. We're going to talk about compliance. We're going to talk about all the things that the government makes you do that isn't taxes, or is a different kind of tax other than income tax, okay? We're going to talk about all kinds of taxes, all kinds of things you need to do to comply with stuff, and then we're going to talk about other business issues as we go along, okay? So let's start with, what's a business, right? What is a business? A lot of people come to me and they're like, I got to get legit. I need to be a real business. I need to set this up. I need to do this. Sorry, I keep walking in front of that. I walk around a lot. And I keep walking in front of I'll step over here. Hopefully I don't fall off the stage. A lot of people are like, I want to get legit. I want my business to be real. I need to set it up with this and that, and I need an LLC, and I need this, and I need, okay, what do you need? IRS definition is the intent to pursue a profit. Not even making a profit. Not even making money. The intent to make a profit. If you're doing what you're doing to make money, you are a business, okay? Don't feel like you have to do anything else to be legit. The IRS, the government, everybody else thinks you're a business because you're wanting to make money. You are pursuing a profit. Now, how do they read your mind? They're like, wait, this person's trying to make money. How do they know you're just not raising dogs for fun because you love dogs and sell some puppies to pay for all the food, right? That's not a business. I mean, it could be, but how do they tell the difference? Okay, so your intent is shown in a couple of ways, the way they can measure your intent. One is advertising, okay? If you're on Facebook, Marketplace, selling stuff, yeah, you're kind of a business and in it to make a profit. If you are on eBay or if you have an Etsy, you're probably in it to make a profit. You're probably a business. And the other thing that they judge is risk. So are you spending money to make money? Are you putting money out? So if you're buying stuff to resell, if you're buying supplies, if you're investing in some kind of license or degree or, learning to do something, you're advertising, you're a business. You're already a business. So you don't have to worry about being legit. You already are. So let's talk about common business structures. Common business structures. Structure is how you're formed in your state, okay? So every business, even if you're just you're a sole proprietor. According to the state, according to the laws, if you're selling stuff, if you're trying to sell stuff, even if you haven't made a sale yet, if you if you're putting an effort into it, you're a sole proprietor and you're a business. So it's just you if you don't have any partners. Now, if it's you and your friend, you're a partnership. Partnerships can be two married people. Partnerships can be two unrelated people. Come on in, have a seat, we're just starting. I don't think you missed anything yet. Everybody's walking in. I had to get started, but and while I'm taking a little break here, Kelly is coming back, and you're all going to get a printed packet here for notes. So I'm trying not to cover too much until she gets back, and you'll be able to take all these slides home with you, and then you can make notes. Okay? All right. Partnerships are formed contractually. So if you and your friend decide to start washing cars together or whatever, you're a contractual partnership. You have a verbal contract. Okay, verbal contracts are bad. Don't do it. Get it in writing. So if you want to have a business and a partnership and it's going to be more than, like, hey, let's do this thing together. And now it's like, well, maybe I should quit my job and we should do this thing together. Even if you're married people, even if you're legally married, get your business in writing. Write it down. What everybody's expected to do, how to end it, who's responsible for what. I had a husband-wife partnership that was a restaurant. He was like, nobody was paying the payroll taxes. Okay? They just stopped. There was a family emergency, and neither of them paid the payroll taxes. And their defense against the IRS was, well, I thought she was doing it. Well, I thought he was doing it. Really? It don't work that way. So you have to have, they both consider you're both responsible then. You need to be responsible. You need to know who's supposed to pay the taxes, who renews the license every year. Write it down. And especially if it's somebody that you're not married to, if you have a business partnership, get it in writing. I mean, being married to somebody is difficult. Being in business with somebody is more difficult because there's no fun time, right? All you do is argue about money. Your entire relationship with your business partner is arguing about money. So make sure, if you want to keep your business partner, write it down. Know who's supposed to do what. Know whose responsibilities are what. Okay, now let's get to the biggie. This is the one I get the most questions about. I need to be an LLC. Okay, we're going to talk about, do you need to be an LLC or not? An LLC gives you a couple things. Let me see, I think that's the next slide. Anyway, let's talk about what an LLC is. It's a separate entity. It's formed by the state. It's a contract between you and the state of Arkansas, or whatever state you're in. Okay? You're contractually forming this. Is that your business? No. An LLC is a box that you put your business in. Okay? You can have an LLC and put property in it, invest in it for 20 years and sell it. That's not a business. Okay. Here we go. Yay!
Our computer's kind of slow, Loris.
That's okay. Here's everybody's packets. So now you can take notes. Okay. So an LLC is merely just a box. It's not your business. So do you need to put your LLC, do you need an LLC box to put your business in? Let's look at that. I think. Let's talk about a couple other things first. So what about big corporations? Who owns big corporations? Right? Do we know this? Who owns big corporations? The stockholders. So you have stockholders. Who runs it? The CEO, right. The CEO. That's the boss, right? How does the CEO get elected? They have a shareholders meeting, and the stockholders elect the board of trustees, right? The board hires a manager, and then he hires all the people below him, okay? When you're a single member LLC, when it's just you, you're all those people. And you got to remember that when you're doing stuff, that you're the stockholders, you're the person who owns the company and finances it and makes it happen. You are the board who makes all the decisions as to should we close the company, should we do this, and you're also the person who hires everybody, the manager, which is also you, okay? So you wear a lot of hats when you're an LLC. Don't forget, I have a video on my YouTube channel called Why Am I Wearing 3 Hats, and I'm actually wearing 3 hats. You might want to watch that. I have a lot of funny videos. All right, Why do we need an LLC? Is there another slide? Here we go. I tell everybody these are my three main reasons. I'm sure there's other reasons. These are my three favorite ones: liability, insurability, and taxation. So liability doesn't mean that you can go destroy somebody else's stuff and be like, it was the business. The business doesn't have any assets. You can't sue me. No. You're always liable for your actions. You're liable for your employees' actions. Okay, that's why we have insurance, for when mistakes happen. Liability in this sense of how you're a limited liability company, an LLC. The liability it limits is financial. So if you decide to go down here, your business is going real good, you decide to rent an office. Well, you got to sign a 5-year lease. Okay, 3 years from now, you don't want to do this anymore. You had a baby, you want to retire, you know, whatever. Your life changes and you don't feel like doing this anymore, you want to close down. You just close your business. You're still on the hook for 5 years of lease. You still own that money. You still have to fulfill that. If you're a limited liability company and the company closes, there's no assets, they can't come after you personally. Okay, same thing if you're like renting storage units or you commit to like an insurance policy or, you know, financial commitments like that. If there's just the business closes and the business can't fulfill its obligations for whatever reasons, that's the liability it limits, okay? Not the actions of people. Now, we're going to come back to liability here in a minute because we're going to talk about tax liability. I'm getting to taxes. Shh. Insurability. This is a sneaky trick. It's legal. It happens a lot. Say you start a lawn mowing company. This happens a lot. Mowing grass, catch a rock goes through the window, breaks the window, and breaks something very expensive behind the window in the person's house. Business insurance is not mandatory. They don't have to sell it to you. Homeowners insurance, they got to sell it to you at some price. Health insurance, they got to sell it to you. Car insurance, it's a law to have it. They got to sell it to you. Business insurance, no. If they don't want to sell you business insurance, they don't have to. And if you're a risk, you made a claim, they're going to pay it. I mean, they're going to pay for it. But then they're going to cancel your policy. Be like, sorry. And then they're going to tell all their friends and other insurance companies, and you're blacklisted, and you will never get business insurance anywhere ever again. Which is why you put it in the name of the LLC, back to liability. So if you're doing anything risky, you can close down your business, you can start another LLC, start another mowing company. That's not an insurable. I mean, you can recover from it. It's not you that's uninsurable anymore. Happens a lot in construction companies. I see it happen all the time. Bad things happen. They hire stupid employees, they do stupid things, you get sued. The company goes under. A couple weeks later, Joe Carpenter's back out there again with another carpentry company. It happens. So, insurability, if you're doing anything dangerous, if you are touching people, okay? So if you have any kind of license to touch people, like you're doing hair or tattoos or massage. I get a lot of people like that, okay? If you are licensed by the Department of Health to touch other people's hair or body, yeah, you probably want to be in an LLC in case you get sued. Especially hairdressers, because you're putting chemicals on people's hair if they're allergic to it or something. I mean, bad things happen, okay? So, insurability, you got to have insurance. If you're required to have insurance because you're doing something risky, you probably want to get an LLC. Probably. If you could hurt somebody else's property, or you're doing anything on somebody else's property, like mowing their grass, or planting flowers, or walking their dogs, okay? If you're touching other people's person or property, or your employees are touching people or property, yeah, you probably want to have an LLC.
Diane,
Yes?
right here. And I feel like I know the answer to this, but I feel
Go
like
ahead.
it needs to be asked. So,
I'm gonna repeat everybody's question because this is being streamed and stuff, so I'm not being redundant. Go ahead.
no worries. I lost my train of thought. Okay, if you have an LLC and we're talking about like insurability, you're covered if you have an additional set of insurance, or you're also covered just by having the LLC?
That's a very good question. I might have confused everybody there. if you're doing anything dangerous, you need to have insurance. But it's the LLC that would be under the insurance policy. You would have to have the insurance policy as the LLC. So if you're building houses or doing carpentry work, and you want to be Joe Carpenter LLC, and you want Joe Carpenter LLC to be the person that's insured. You want the company to be insured. If the company gets sued and has to pay it out, the insurance pays out, they're not going to insure Joe Carpenter LLC anymore. But in a couple of weeks, poor old Joe is going to restart a new company somewhere, and he's going to be Joe's Better Carpentry LLC. And that's going to be a completely different company. I mean, it's going to cost him money. You know, everything costs money. But he can recover from it. And he won't be uninsurable, and he'll continue to, you know, be able to start on as another company. So you want to start out as, you know, if you're doing something dangerous that it's possible you get sued, you definitely want the insurance policies to be in the LLC name, in which case you want an LLC. You don't want to do that stuff as a sole proprietor. Last one, you knew I'd get to taxes eventually, right? You knew it, right? This is a tax class. Okay, taxation. So this is why most people come to me. Diane, I'm not doing anything dangerous. I'm just giving people advice. They can take it or leave it. I don't touch any people. I don't do anything dangerous. I don't see me being sued. I make art. I sell things. You know, whatever. But I make a lot of money. When you make a lot of money in the United States, I'm sorry, I teach a lot of expat classes. So, when you are self-employed, you owe self-employment tax if you make over $400. So what's that? Self-employment tax is your part of Social Security and Medicare, and your boss's part of Social Security and Medicare. When you have a job, they take about 7.5% of your paycheck. Your boss puts in an equal amount into Social Security and Medicare. You never see that. It goes into your account. Your employer is required to pay it. That's the cost of having employees. When you're self-employed, you're the boss and the employee. So you get to pay both halves. It is getting warm in here. Don't know if my sound guy, he hears me. It is really hot in here. He's coming. I'm sorry, what?
The AC is going to get replaced at the end of September.
Oh,
It's
it's just going to be hot.
yeah, sorry.
Oh,
It's
no.
working as hard as it can.
All right, thank you. So anyway, self-employment tax. It's a lot. So when you have a company, say your company brings in $50,000, and you have $30,000 in costs, at the end of the year you made $20,000. You're like, okay, I made $20,000. I still can't quit my job. I made $20,000. I'm going to make it, right? But then, on top of income tax, in addition to income tax, not even paid to the income tax, it's paid on your same form, but sent over to Social Security, you owe 15% of that $20,000 at the end of the year. That's a lot of money. That's like $3,000. Okay, that's a lot of money. And then that's like, how can I afford to be a small business person? Like, I have to keep paying all this and tax. So, and that $3,000, you know, right there, that caps it like, I think it's like $22,000 or something like that. It's a ridiculous amount you can wind up paying in self-employment tax. It hurts a lot. It's very high. That's a lot of the reason, most of the reason people come to me for an LLC. When you are self-employed, you file on Schedule C, or when you're a disregarded entity. Even if you have an LLC, you can still file like you don't have one. But you owe 15% self-employment tax on your bottom line. Ouch, ouch, ouch. It's high. If you have an LLC, you can choose to file as an S corporation. You can separate your business from yourself and be like, guess what? Now I'm not self-employed anymore. Now I have a job. I work for this company. I work for Grassroots Taxes. I pay myself a paycheck. That salary portion is where I pay my Social Security and Medicare. The rest of my profit is passive income. I'm not self-employed. That's the company's money. I get a dividend. Remember we're talking about you got to run it like a big corporation. When you own stock, you get dividends. That's not from you working there. That's from you investing in the money and being a shareholder and getting the money. You have the right to get you have the right to get some of your money back, your profits back from the company. You have a right to your dividends. So who sets that numbers? You do. Right? So, and they let accountants do their own taxes. Anyway, you do have to pay yourself some salaries. Like, can it all be dividends? Right? No salary? Right. Well, one, you wouldn't be paying anything into Social Security, and even if you're paying a little, it's better than paying in zero. Your 0 years count against you a lot, so try to pay in some every year at least. So pay some into Social Security, but it doesn't have to be all of it. So you can take your self-employment tax from like $18,000 or $20,000 down to like $10,000, right? By running in that part through salary and having the rest as dividends. It's kind of a little math gymnastics. I can't teach a whole class on that today. It is a little confusing, but it can save you from paying a ton in self-employment tax. So if you're making good money, you have a lot of profit, if you have an LLC, you can file as an S corporation, pay yourself a salary. You can do it on the last day of the year. I mean, I write myself a couple of paychecks a year, not many. At the end of the year, I'm like, oh, wait, how much? All right, let me pay in my taxes on a paycheck. I usually do income checkups with people in November and December to make sure that, their taxes are going to be paid by the end of the year. But you want to see how much money you're making, you can gauge your salary based on that. So as long as you're paying yourself a reasonable salary of something, and you have, whether or not you have employees, you can save a tremendous amount of money by having an LLC. So 3 reasons: liability, if you're going to be signing leases, renting buildings; insurability, if you're doing anything dangerous; and taxation. Now, the one thing I didn't mention is sales tax. If you are collecting sales tax, you have a tax liability to the state. I will get to sales tax later. We're not going to talk about sales tax right now. But if you are collecting sales tax, I also highly recommend, if you're doing any kind of business at all, you probably should get an LLC and not have that tax liability on your person, because they do come after you, and they are mean. The Department of Finance and Administration is far worse than the IRS. They do not care.
I have a quick question.
Yes, ma'am.
So, if I have an LLC and it goes through my Schedule C, is that still considered self-employed?
That's self-employed. If you have an LLC and you're filing on Schedule C on your 1040 as self-employed, you're paying self-employment tax on all of it. And if that number that you get on Schedule SE for your self-employment tax is tremendously large, you may consider filing as an S corp in future years. But you don't have to make that decision until, well, I wouldn't wait too long. I mean, I would make up your mind by, like December, January at the latest, because your tax return is due March 15th, not April 15th. A lot of people, oh, I want to file. It's like, no, you needed to file an extension a month ago if you wanted to file on April 15th. So if you're thinking about filing as an S corp, don't forget you're due March 15th. In the back, yes, question.
Is S corp different than an LLC?
An S corp is merely an election on how you want to be taxed. An LLC is an empty box, and everybody recognizes the empty box, but it can be whatever you want it to be. You decide how you want your empty box taxed. So when you have your business as an LLC, you decide, am I a sole proprietorship or a partnership? Well, it depends on if you're a partner, if you have partners or not. Or do I want to be taxed as an S corporation? Or do I want to be taxed as a C corporation? There's some people that work out better as a C corporation. It's rare. It is very rare. Usually you pay more in taxes as a C corporation, but there's exceptions. So an LLC is formed by the state, and then you have to decide at some point. There's a default. It defaults to being a disregarded entity as a sole proprietor. But you don't have to file that way. You can elect to be taxed any way you want. You can elect to make that LLC anything you want for tax purposes. That's why they're so versatile. Yes, ma'am, over here.
When you're saying that by default, the LLC is taxed like sole proprietor. If you're doing it that way, then it's not helping you on your tax, is that correct?
It is not at all. Yeah, if you file as a sole proprietor, it's exactly the same thing. However, insurability, liability, it still helps you there. So there's still, there's still reasons. If you're doing anything dangerous, you have business insurance and you're taking a risk. I mean, if there's risk involved. If you're, like I said, if you're touching persons or property, other people or property, if you're doing hair, tattoos, dental work, I don't know. It depends, if you're touching other people or you're touching other people's property, it's probably a good idea to have an LLC just for that, to buy an insurance policy and have it under that instead of your name.
So you can't file as S corporation unless you have an LLC?
Bingo. Exactly. Okay, other questions on entity setup, entities, S corps, LLC, sole proprietor? We good? We're going to move on. I think, there we go. I say this a lot. Success in business is measured in dollars. That is not 100% true. That is actually a lie. But I say that because the way other people measure your business is in dollars. They don't care if you're happy. They don't care if you love your job. They don't care if you're the most passionate person that has the most perfectly mowed lawns or the best hair or whatever it is you do. Nobody cares. All they care about is the money. So we have to have bookkeeping, we have to have record keeping, and we have to show other people that you're successful the way they measure it. Which, I'd rather measure my business by how happy I am. I love doing what I do, but I have rent to pay and grandkids to buy stuff for, so mostly grandkids to buy stuff for. So I forgot, I should have another slide here. And I was thinking about this last night, and I made some other slides, and I didn't make an extra slide here. So why do we need record keeping, bookkeeping? First of all, I don't know why I don't have a slide on this. It's the law, okay? It's the law. The IRS requires you to keep all books and records for your business. Available for audit for like 7 years. Everything. Does it have to be on paper? No. Can you scan all this stuff and throw it away? Please. Can you just not generate paper in the first place? Even better. But you need to have records of what you're spending, where you're spending it, and why. So if you have receipts from Walmart and stuff, how do they know you're not buying dog food? Okay, you need a scan of that receipt. But if you're buying stuff at State Beauty Supply, you're probably buying stuff to do people's hair. They don't sell anything else, okay? And if you're buying stuff at the liquor store, it's pretty obvious what you're buying, okay? But things like Walmart, CVS, Target, absolutely scan your receipts. You could be buying anything, okay? So why do we need record keeping other than the fact it's the law? Let me make sure I don't, Past, the future, and other people. You need to review what happened. How was my year? Did I actually make any money? It felt like I made money. Did I actually make any money? Let's add it up. Because remember, page 1, what's the definition of a business? Intent to make a profit. If you're not making a profit, why are you here? All right, you need to rethink. It's about making money. We should be at least attempting to show a profit. Everybody thinks you have to make money after the first 3 years. No, there's businesses that hardly ever make money. Farms never make money. But businesses, small businesses, I mean, as long as you're showing you're trying and you have the intent to make a profit, you're advertising, you're changing up what you're doing, you're trying. There's bad economic years. As long as you're showing an intent to make a profit, But anyway, where were we? You need to review what happened. You need to see how you're really doing. You can't just there's the $35 in my checking account. I'm not broke yet. You can't run your business that way. You gotta know how you're doing, and you gotta be able to tell other people. And with those same numbers that you're looking at what happened last year, you can predict the future. You can see what's gonna happen next. Am I gonna have enough money to pay my bills next month? Do I have enough money to hire somebody? Should I upgrade the software? Should I buy a new computer? How do you know you got enough money? Record It gives you answers. And then, of course, other people, banks, grants. There's a lot of scale-up programs. I know you're in this program. You might be participating in some scale-up programs. I know Startup Junkie has stuff like that. If you're going on that track with tech or something and you're trying to sell your company to Walmart or Amazon or something, I don't know, trying to get on the shelves at Walmart. I have some maker-to-market people here. If you're going to scale up, you got to show this to people, and you got to show it in numbers. Contractor licenses, that's another big one if you're in construction or anything. Getting your license, you got to show you're financially responsible. You got to fill out a balance sheet every year. You need this stuff. And of course, taxes. Of course, taxes. Okay, so we'll get to that. You got to know your numbers to get them on your tax forms. And today is August 27th-ish. September 15th is 3 weeks from yesterday. That's the corporate deadline on the extension to the extension. It ends 3 weeks from yesterday. And guess how many people haven't gotten me the records yet? 62. 62. 62 self-employed people have not gotten me the records that have formed an LLC and haven't filed yet, that were supposed to file back in March, and they're still out on extension. Their extension all expires in 3 weeks. I'm going to be a busy girl. So it's a little nerve-wracking trying to, don't be that guy. Don't be that guy that I'm constantly texting saying, where's your numbers? You've had all year. What is your problem? Okay, I don't say that. That's what I think when I'm talking to you. Anyway. Things you should know. Are you profitable? Are you profitable according to, what this is? Can you pay your debts? Right? So you borrowed some money. You got a small business administration loan, maybe. You got some, don't take one of them out unless you have to. Small business administration loans, you got a loan from a bank, or you got some credit card. Are you profitable, and are you able to keep paying your debts? And more importantly, when are you going to get your money back? All the money you sunk into this, buying equipment and buying stuff and getting your license or whatever it is you're doing, and all your inventory. All the money you sunk in at the front end, when do you get that back? That's why we need record keeping. We've got to make sure that you can pay yourself, pay your debts, get your money back out of the company, have the company start paying you, right? So that's why we need record keeping. There's so much more to it than reconciling your checking account. I have so many people, they sign up for QuickBooks. You don't have to sign up for QuickBooks. QuickBooks is not a thing. I got way better stuff to do. I'll get to that. They sign up for QuickBooks, they put their checking account in there, and it's like, all right, I categorized all my transactions. All right, I reconciled my bank account. I'm done. No. Getting your bank account to reconcile is not it. How much stuff is in there that's not reconciled? How many transactions are in there that were in a different account that aren't cleared? Like, how many things are left over that was actually paid for by cash or put on a credit card or something and is categorized? It didn't come out of your checking account in the first place. You got to look at all that. There's a lot more to it. It's like, I've reconciled my account. I'm like, no, but your books are a disaster. Okay, so we're going to talk about accounting. And I call this accounting -1 because I can't teach you accounting 1 because that would take me 15 weeks. So this is accounting -1. This is the really, really basic pre-accounting course. There's a lot to it. Okay. We're going to talk about expenses. All right, there's a show, it's called Schitt's Creek.
Yes.
Okay.
Love it.
How many of you have seen the clip with the write-offs? It's the write-off.
Yeah.
The write-off people. I don't know. You just send it to the write-off people, right? No, okay. First of all, don't ever say write-offs because that's just not a real word. It's hilarious. If you ever want to look at something funny, put Schitt's Creek and then write-off.
Just watch all of shit.
And just watch the whole show. It's hilarious. But anyway, but where they go on about the write-offs, it brings tears to my eyes because this guy knows absolutely nothing, and he's just like, whatever, it's like. So, talk about accounting. So, expenses, okay, what people call write-offs or deductions, whatever. Business expenses are things that are used up that you cannot recoup the cost. So once you pay your employees or your contract workers, are you ever going to see that money again? Can you get that labor undone? No. Okay, that's an expense. When you open a package of something and, all right, you can't return it. It's over. You used it. You used part of the paint, part of the stuff, anything that's, all right, that's an expense. It's gone. You can't sell it to somebody, right? Business meetings. Driving here tonight. The mileage and the gas it took to drive here tonight, you ever going to get that back? No, hopefully I'll make it worth it for you. But that's a business deduction. Driving here to see me speak, business deduction. Everybody track your mileage. Anything that is used up, you can't sell. Insurance payments, taxes, right? Anything that is used up that you can't get back, that you can't resell, that is sunk, that's an expense. Assets, things that last over a year or that can make you money. So you buy a whole bunch of inventory. Who makes stuff here? I need to get some better examples. What kind of stuff do we make? What are you selling? What's your product?
Embroidered shirts
Embroidered shirts.
with logos.
My sister did that for like 20 years. That's a good job. That's,
So inventory.
yeah, but you have to have a lot of inventory. You have to have a lot of inventory, you have to have a lot of thread and a lot of backing, and, okay.
Ornaments, wood slice ornaments.
What kind of ornaments?
Wood slice ornaments.
Oh,
Yeah.
oh, I've talked to you, haven't I?
No, I paint them.
Oh, okay. Oh, somebody else was doing like laser. Okay.
Yeah, you can do that.
Are you the laser engraver that was talking to me a couple weeks ago? No, okay.
No, but I do that too, yeah.
Okay. Yeah, that's cool. And they have it downstairs.
Yeah, I know.
They have it downstairs too. In the back there? What do you guys make?
Bath bombs.
Bath bombs. I love bath bombs. You too?
No, I teach music.
Oh, okay. Okay. Well, that's even better. So-
Definitely inventory.
Who else is maker to market? Back in the back?
Artificial flowers.
Artificial flowers. You actually make them or you arrange them?
Make
Really? Wow.
Out of what? What material? Materials. Different materials. Yeah.
So they're not like made in a cheap factory in China, actually nice ones.
Yeah, no. I currently make a lot of really beautiful paper flowers, and I'm trying to, in this program, figure out how to make them more durable. So I'm still at the beginning phase of the process.
That's awesome.
Yeah.
That's
Artificial
awesome.
wildflowers that are local to this area.
Oh, wow. Okay, who else? Anybody? You're all in service? Okay. You make something?
In the process, I'm still very,
And what was that?
a planner and then also like a vision board kit.
Oh, wow. Okay, so the planner's going to be digital or paper?
I want it to be paper.
You want actual paper journals.
Yes.
Paper journals are awesome. They're good sellers too. So you all have some exciting products, but it all costs a lot of money to make stuff. So you got to think about stuff. When you buy stuff, it's going to wind up 3 different places. It may change places. You're going to buy your stuff. It's going to go in a stack. It's going to be called inventory, eventually for resale. Okay. You have works in progress. And some of your stuff dies in work in progress, especially when you're doing experimental stuff and you're not quite there yet. You're going to burn through a lot of your inventory. Well, hopefully not a lot. I don't want to curse what you're doing, okay? Hopefully not a lot. But you're going to burn through some of this inventory that you buy, and it's going to be useless. It's going to be stuff you can't sell because it's specific products, right? So that's product development. So it's out of inventory, and now it's an expense. And some of your inventory is going to be sold, right? Customers, going to wind up in hands, right? Once it leaves you and it becomes sold, okay, then it's cost of goods sold. So I know it's difficult to track this stuff, and you really can't keep track of every piece of paper and how much, 2 cents for every piece of paper. And you really can't keep track of every spool of thread. And you can't keep track of every package of stuff. It's hard to do that. So generally, I advise everybody to take inventory at least once a year, see what you have, and then write off the stuff. Turn some of it into deductions as to stuff that was spent. You want to keep records of what you're throwing out, approximately how much waste you have. It happens. Things get messed up. Sometimes you got to toss stuff. It's either product development, or just, you can call it supplies, or you can call it shrinkage, or whatever you want to call it. But when stuff gets worn out, and it's just not a saleable product, and you just have to toss some stuff. It happens. Keep track of how much you're throwing away, because that's going to be expensed at the end of the year, and the rest of it's...
Not cost of goods sold?
No, because you didn't sell it. You tossed it. So it's a little bit fancy. It's a little bit more advanced than I wanted to get into, but it happens. So keep track of what you're tossing, what you're donating to Goodwill, what didn't work. You're going to make stuff that doesn't work. And it's sad, and it costs money, but it's all part of your business. So be sure that you're keeping track of what you're tossing, and then that's an expense. It's a sunk cost. You're never going to see it again. That's an expense. You want to expense that stuff out. When you do things as cost of goods sold, we figure that out at the end of the year based on your inventory. How much do you have left over? Inventory is valued at what you paid for it. I have some people that are artists that dumpster dive. Can I say that right? They dumpster dive their stuff. I mean, I imagine some people buy stuff at Goodwill or pick stuff up at yard sales, but they also dumpster dive a lot of their stuff and upcycle art. I think that's what they call it. A lot of people buy old clothes, tear them apart, use the fabric, and make new stuff. A lot of people just take rusty old junk and make art out of it. If you paid nothing for it, the value of it is zero. So you don't, oh, but it was a $200 piece of art and it got broken. Yeah, but you really only had, I mean, you take your time, you can pay yourself, as part of your salary, like that in it, but that's sunk too. So, the value you paid for it is very little. So if you're buying things that are expensive, it's a little bit more like your shirts, for one. There's a lot in that. And it really depends on the extent. Sorry, I'm overthinking stuff. I can't give specific to everybody, but I'm going to try. So anyway, assets are things that are going to make you money. Your inventory is an asset. You're going to sell it. If you're not going to sell it, it's junk. You need to write it off. It's, if you're junking stuff, you need to write off the parts that you aren't selling. Other than that, it's still an asset. It's still going to make you money. Sewing machine, definitely that's an asset. Whatever you paid for your sewing machine needs to be on your books as an asset, even if you paid for it personally. You need to transfer that to your business. That's an asset. It's making you money. Glue guns, processes, whatever it is you're doing, make sure you're keeping track of everything you're spending on things that become inventory and things that become assets. Don't automatically write it off as supplies, because everything's not supplies. And the more you have in assets, the better your business looks at the end of the year. So you want to, you don't want to be completely broke all the time. All right. I don't want to get into too much here. So okay. Oh, I made a note on here that we should have a test. We're going to have a quiz. Okay, let's talk about things. I want to hear about things that are expenses. It can be stuff we already said. You don't have to think of something new. But let's think about what would be an expense, a sunk cost. Anybody got anything?
Ink and paper.
Ink and paper. The minute you open that package of paper, it's gone. You can't sell it. It's not worth anything. Anybody else? Things in your business that would be an expense.
Damaged products.
Damaged products. Try to send it back if you can.
No,
But
like you're doing
yeah.
it and then something
Yeah,
went
if
wrong and you can't sell it.
Yep, that's right. Damaged products. Absolutely.
Yeah, I've run into that a lot. If I make bath bombs on a humid day, they don't harden right.
Oh.
And you cannot make it into anything else?
They still work, but they'll be misshapen and.
Just not as pretty.
Yeah, best
Yeah.
I can do is like dry it out, crush it up, and turn it into a bath powder.
There you go. Also, in what you're doing, generally is pretty packaging rich. All your packaging is also inventory, by the way, and it is for resale. All your packaging, we're going to talk about sales tax and things being for resale. You're probably pretty heavy in the packaging, the pretty box, the bows, the cover, I don't know how you make it, but bath products and stuff are generally pretty pretty, the packaging is nice. It comes in, you know, like a fancy package with little padding, you know. All your packaging in that situation, your packaging may cost more than the actual cost of the bath bomb, right? Because you got to, you know, the quality of your product, right? So that happens. So all of that stuff, when we get to sales tax, remember that's stuff for resale. All your packaging and display stuff is, we're going to talk about that. When we talk about sales tax, we're going to talk about things that are for resale.
Which means it's exempt.
Exactly. You can buy it with your sales tax permit.
Correct, that I'm not supposed to pay sales tax when I purchase it, because when I sell it.
Exactly. You're not the final user. But it's only for things that are for resale, but all your packaging is resale. If you have fancy packaging, it is for resale. It is part of your product that you are selling. You are selling a product with a fancy package. So remember that for later. Anybody else got anything that would be, throw it out here. Come on, you guys can do it.
Paint, clay.
Are you an artist?
Yeah.
I would hope. Okay, yeah. If you're an artist, yeah, your paint, clay, anything you buy that's art supplies, as soon as you open that package, can you sell it?
No.
Can you?
I mean, if I have to produce it.
No, I'm saying, can you just open a can of paint and, here, I'm going to sell this can of paint on eBay? Like, no, right? You can't even sell it at a yard sale. It's worthless. It's sunk as soon as you open the package. So yeah, clay, paint, anything like that you do. Anybody else? Oh, go ahead.
Software?
Software is licensed. It's not even yours. That money's gone. Yeah, good example. Software is just, it's licensed. You don't even buy software anymore. You don't even get it. It's licensed. You're buying a license that they could take away at any minute.
So all of the materials in my bath bombs would individually be, because once I open it, I can't
Yes.
sell it. I have to mix them together to form my product.
But that's technically cost of goods sold, which is a little bit different. I think we're gonna get there. I don't know. We're not really covering the difference between expenses and cost of goods sold because it's a fine line with taxes, and it's a very fine. Nobody here is in the marijuana industry, correct? Nobody's selling. Nobody's got a dispensary or anything, a grower. Okay, that's the only business where it really makes a huge difference because you can only deduct cost of goods sold. You can't deduct business expenses when you're in the marijuana business. So, because that's technicality, but it's a technicality between cost of goods sold and an expense, and it depends on what line it comes off on your tax form. And I don't want to get into that too much tonight. So you can just, we can all call cost of goods sold as an expense. Okay, for all intents and purposes, they're the same thing. Also on my website, if you haven't seen my website, I think at the very end, we don't have the resource page, do we? Oh dear, I'm gonna have some more stuff on my website, but I do have a great blog on inventory with a downloadable sheet to do inventory. So if you wanna do inventory at the end of the year and get a written inventory of what you're doing, I have a real simple sheet. If you just look at grassroots taxes, go to the blog, search for inventory. I have a great inventory blog, and you can download an inventory sheet there where you can write it down and have a written record of what you counted at the end of the year and how you valued it. Anyway,
Diane,
yes?
before you move on, I wasn't capturing what you were saying because it kept stopping. Packaging cost is considered what? Like the packaging?
It's for resale.
So would it fall under?
It's an expense. When we're gonna talk about sales tax in a little bit.
Okay.
It is 6:53. I gotta start talking faster. So anyway, we're gonna go to the next slide.
Library closes at 8. So.
I know. I'm supposed to be done at 7:30, but I never get done at 7:30. But anyway, all right. Assets. We talked about assets, right? You know things that would be assets in your company. All right, let's move on. What's liability? One of the biggest things I see when people send me their QuickBooks and are like, here's my books, what do I see? Credit card expense. It came out of your checking account, it's on there. It went to Discover. Great. What'd you buy? Do you even know? I need to see what's on your Discover card when you bought it is when it's an expense. We're going to talk about liabilities. We're going to talk about this. I can't walk. I always walk back and forth a lot, and I can't. So I'm going to step over here. I'm at Lowe's. I'm buying a saw blade. I gotta go to work. My saw blade's dull. It broke. I need a new saw blade. So I go to Lowe's before work, buy me a saw blade, gonna go to work, get out my wallet. Dude, forgot my wallet. My friend Joe's standing next to me. I'm like, Joe, loan me some money so I can buy this. Right? Joe's like, sure. Gives me $40. I pay for the saw blade. So now we got two different things going on. I bought a saw blade from Lowe's. Do they care where I got the money? They don't care where I got the money. They got their money. They're happy. They don't care. I also owe Joe $40. That's a completely separate issue. That has nothing to do with Lowe's. And Joe don't care what I did with the money. He just wants his $40 back on Friday. Okay? We've got two different things going on here. Two separate transactions. We've got me buying a saw blade and me owing Joe $40. It's the same way with your credit cards. Your credit card is the guy standing next to you in line when you don't have enough cash. Okay? You're buying stuff from the store. They don't care where you got the money. The IRS doesn't care where you got the money. You have your stuff. You got a saw blade. You can go to work and do your carpentry stuff. Okay? You bought it on Friday, or you bought it on Wednesday. You paid Joe back on Friday. That's between you and a credit card company. Okay? So you paying a credit card is not an expense. You buying stuff on the credit card was an expense. It doesn't matter where you got the money. You got the saw blade, they got their money. The transaction happened on Wednesday, right? When I borrowed the money. So that's when it goes in your bookkeeping, when you bought your stuff. So you need to have your credit card account set up in your bookkeeping as to when you bought your stuff. And then when you pay your credit card, it's not credit card expense. You don't get to deduct it again. You deducted it over here when you bought it. You don't get to deduct the $40 again when you give it back to Joe. You can't double dip on that. And I see that in a lot of people's QuickBooks. It's like, oh, they have everything they bought on the credit card in the credit card account, but then when they go to pay the credit card, they put it down as credit card expense. Same thing when you're paying off your loans. When you're paying anybody back, when you're giving money to somebody and you're not buying anything, you're just paying off debt, that's not an expense. You don't get to expense it again. You expense it when you buy stuff. And if you didn't buy anything, you just get like a loan from the bank, well, then you have the money. You have an asset. It's not an expense. You have it right here. The asset is a money, right? You can do something with it. So when you're paying off your credit cards, make sure you record it as a liability and that you're paying it back. Now, one more, maybe two. Profit and loss statement. As everybody says, I need a P&L. Okay, it's profit and loss. You can't have a profit and a loss, and I really think that's the stupidest name of anything ever. You can't have a profit and a loss. So why did everybody call it a P&L? I don't know. The correct name is an income statement. But anyway, P&L. That is a period of time. They want to know how much money you made between this date and this date. Last year, last month. This is what the banks all ask for. This is what everybody asks for. They want a profit and loss statement. What's on there? It shows your revenue, your sales, and it shows your expenses. Your sales minus your expenses is your profit. Right? Easy peasy. We can do that. Simple subtraction. But a profit and loss statement does not show you if you bought an asset, well, you exchanged money for an asset, you still have something. Nothing went out the window. Nothing is sunk. You just turned green money into a thing that's going to make you more money. It doesn't show your debt payments. It doesn't show your cash flow. It doesn't show how much money you took out of your pocket and put in the company that month to keep it alive. It just shows that you made a profit. A balance sheet is the other piece of information everybody wants. If you get a contractor's license, we do a balance sheet. It's a freeze frame. It's a snapshot. That's what's right now. If we would liquidate your company right now, what's it worth? How much money you got in the bank? How much would your sewing machine sell for? How much would your equipment sell for? How much would your packaging machine, do you have, I don't know, do you have a box folder or something? Some people have them. No, okay. How much would your machinery sell for? How much would your computer sell for? Right? How much is your company, and then we pay off all your debts when we get rid of all your stuff, how much is left over? That's what a balance sheet has. Are you positive? Do you have more stuff and more money than you owe in debt? And if you don't have any debt, it's positive, and that looks great. That's why I say, don't borrow money unless you have to. I mean, unless you're sure it's going to pay you back. Don't go into debt to start a business. Start small. Work your way up. Try not to get sunk into these, especially if you have a lot of software, not mentioning any, software made by Intuit, like QuickBooks. They're going to, or Square, or pretty much most of the point of sale people are like, you could have $50,000 today. Just push this button. Just push it, push it, push it, push it. Don't do it. You have $50,000 today, but they're going to charge you like 64% interest or some ridiculous stuff and take part of your credit card transactions every day to pay it back. Do not take a merchant loan. That is the beginning of the end. I see more businesses go under because they can never recover from having half their credit card, or they just keep taking their credit. It's like all their credit card transactions just go straight back to paying it back. Do not get sucked into you could have $50,000 today. Just push it. Just push the button. We'll give you money. And they do. You'll have it in your account the next day. But you got to pay it back. And if you don't have a plan to pay it back, they're just going to take it out of your credit card transactions at 64% interest and sometimes higher. They're insane. They're insane. Don't do that. Small Business Administration loans, I always warn everybody about them. If your company goes under, remember all that liability stuff we talked about? Guess what? That Small Business Administration loan is federal funds, which means it's exactly the same as student loans, which means it never, ever goes away. It follows you through bankruptcy. It follows you for the rest of your life with no end. There's no statute of limitations on collection. It's federal funds. You have to pay it back. So if you get like a $400,000 SBA loan, you're paying it back, whether you stay in business or not. They're taking it out of your Social Security check when you're retired. They do not care. So be very careful taking out federal money. If you go bankrupt or the business goes under, that's you on the hook for it. Forever, until it's paid back. Be very afraid. So merchant loans and SBA loans. You want to borrow money? Go to where you have your checking account. Talk to them. They'll tell you what you need to do to get your stuff in order for them to loan you money. And they'll have your back forever. Go to a local bank. Don't take these predatory loans. That's businesses go all the time. Predatory loans. Be very careful. Anyway, back to the balance sheet. Remember the balance sheet we were talking about? It doesn't show if you have any sales, how you're spending your money. It doesn't show if you're bouncing checks. It doesn't show any changes over time. It is just a snapshot of how much you have right this second. So you need multiple pieces of information to explain how you're doing. So a balance sheet and a profit loss statement or an income statement is you need both of those things. So you need to put things in the correct categories. You need to put your liabilities as liabilities. You need to list your assets as assets. Expenses are what? Only things that are sunk. Right? If you're like, something that's not sunk, it's going to make you money, you have to think maybe this should be an asset and should be in a different category. Don't just call it supplies, okay? We're going to go real quick here. Predicting the future. 2 things you need to know. And this is where you're using your accounting. You're like, hey, I know some accounting. I can do this. Quick ratio. First thing the bank does, can you pay your bills? Do you have enough money right now to pay next month's bills? Now, if you're working at home, you don't have a whole lot of bills, probably. If you're renting an office or you have employees, you got to make payroll, you got to make payroll taxes, you got to pay the utility bills. You need to have 1.5 to 2 times in your checking account the amount to pay next month's bills. Okay? Add up all next month's bills, you need to have 1.5 to 2 times that in your checking account. If you do not, you're running it too tight. You've got to have a quick ratio of like 1.5 to 2. You got to have 1.5 to 2 times the amount of your regular monthly bills in your checking account as a base, just in case the water heater breaks, just in case somebody cancels their contract, just in case one of your employees quits. Bad things happen all the time. You got to be prepared. So 1.5 to 2 times your bills. You got to know your quick ratio. You got to know, do you have enough cash on hand to pay your bills for 2 months? Or at least a month and a half, okay? Break-even point. This is one of my favorite stories. It's one of my saddest stories, okay? I had somebody here in Fayetteville. They did not consult me first. They did not say, hey, Diane, I'm thinking about starting a business. Should I do this? They told me after they opened. They opened a restaurant. I was like, I'm going to swing by. So I walked into the restaurant, and I ordered me a bowl of soup and a cup of coffee. They come over, and I'm like, hey, how's it going? They're like, it's tight. I'm like, I looked around the restaurant. You know how many seats there was in the restaurant? Like 22. It was mostly like counter and a couple of tables. Maybe there was like 30. Maybe there's like 32. Okay. It was like 32 seats. It was very small. I looked at their menu. I was like, lunch, this, that, and the other thing, $12. Okay. Average ticket, probably about $12 a head. So every one of those chairs for an hour can make you $12. But every chair is not going to be full all the time. I said, how much is your rent? She told me the rent. Your rent and utilities needs to be about 1/3 of your income, okay? When you're running a restaurant, it's really simple. Cost of goods sold, about 1/3, labor, about 1/3, overhead, about 1/3, and you squeak out a little sliver for yourself. That's how restaurants work. The numbers are always about the same. She had 32 seats in a restaurant. Each person sitting in a seat was worth about $12. And I looked at her rent and said, well, you need to make 3 times that. That means you're going to have to you're going to have to feed 80 people a day to make enough money to keep the doors open. She ain't going to feed no 80 people a day. She was closed in 3 months. She couldn't make it. She sunk $30,000 of her 401k into this restaurant, plus lost money the whole time she was there. I could have told her right then that there's not enough seats in this restaurant at $12. You're not, the numbers aren't there. You need to know your break-even point. So, I know a lot of you guys are working at home. Is anybody not working at home and have an office? Has anybody moved up? Everybody's working at home? That's it. What? Oh, sorry.
I have a studio space.
Okay, you have a studio space. Okay. So you need to know that you can pay for that studio space every month. You need to know you got enough money coming in. Now, most of you are starting small, but keep this in mind. If you're going to make a big decision, okay, if you're going to move up, you're going to move into a manufacturing place, or you're going to rent a studio, or you need to know how much is that going to cost every month? How much money, how many sales do I have to make today and every day? What's the average number of sales I need to make a day to make sure and pay the bills? If you don't have all the moving parts, you can't do the math, you're not sure, ask somebody before you make that financial commitment to something, before you move up. I see people, I saw it happen in a bar here in town too. She opened a bar. There was room inside the bar for like maybe 50 people. It was tiny. There wasn't even room for a pool table. Why are people going to hang around in a 50-person bar you're trying to be classy? You know, you're not going to make it. You know, I can see this walking down the street. I'm like, that business, they ain't never going to make it. And they don't. So ask somebody. Get help. Before you make a big financial commitment to anything, please ask me. Ask anybody. I'll find you somebody to ask. All right, now, I think this is my new slide. This is my new slide because I don't talk about this enough. How? This is the how slide. Cut this out, hang it over your desk. Do this on Sunday, or pick a day, or twice a week, or every day. Do these things, okay? Make sure all your receipts are not in the car. I hate it when people leave their receipts in the car. Why do I hate that? Because they're black. They're black, shiny, and unreadable because they're all heat transfer, and it's 9,000 degrees outside. They turn completely black. Instead of having heat transfer print, you can't read them anymore. Don't leave your receipts in the car. Glove box, not the place. Don't get in the habit of doing it in the winter and then forget in the summer. This is Arkansas. Don't put your receipts in the car. Bring them all in the house. I have a plastic shoe box, like the Tupperware shoe boxes. I ain't joking. That's my filing system. I've been an accountant for 30 years. That's how I keep my receipts. I chuck them in the shoebox. I don't take the time to sort them and file them. And who's going to look at them again? I'm not. I just chuck them in the shoebox. I put them in the software. I chuck them in the shoebox. If you don't want to save your paper receipts, at the very end there it says use AI Snap. Most software all uses the exact same AI Snap engine. Snap meaning snap your receipts like picture. That's how they started calling it, but now I don't know what they call it. But basically, QuickBooks, Wave, Xero, FreshBooks, HoneyBooks, like all those. They all have AI receipt snap, where you just kind of, Expensify. Just take your phone, put the receipt down. And it's not just taking a picture of your receipt, because sending me pictures of receipts is just going to make me cranky. Just hand me the box of receipts. It's a lot faster than like trying to blow it up. I can read them. But it reads it. It knows you went to Lowe's. It knows how much money you spent. It knows what credit card you used. It knows what date it was. Okay? It reads all that off the receipt. All you got to tell it is, oh, that was job supplies. Okay? So you do that, you categorize them. Some people just take pictures of all the receipts and categorize them later. And then once you have that snapped into the software, if it's backed up online, you can just toss the paper. So, yes, ma'am.
Which ones would you recommend?
I'm getting there.
Okay.
That's literally the next slide.
Okay.
Do these things. Do all these things. Don't wad up money and keep it in a box and forget to go to the bank if people give you checks on occasion. Mobile deposit them. Do it. Or you can go to the bank if you want. I mean, but this is 2024. Who goes to the bank, right? So mobile deposit your checks. Make sure you take care of that. If you're using software, which I suggest you use software, but you don't have to. You can use Excel. Enter or match all your bank, credit card, and cash transactions in separate accounts. Cash, credit cards. Don't put all your expenses in one pile. Make sure you know what you used to pay for it. Whether you paid for it out of your personal funds, because that's fine, or you paid for it with the business checking account, or if you don't have one, or you used your business credit card, whatever. Make sure you keep track of what you're paying it out of, have a different account for each one, and then categorize your transactions. Calculate your mileage. Please calculate your mileage. It is the biggest deduction out there. Next slide will tell you the easiest way to do that. But even mileage driving here, if it has to do with business, if you think it's business, it's probably business. If you think going to the store to buy supplies and you just happen to buy like dog food while you're there, that's fine. Get a separate receipt. But, your trip to Walmart's deductible if you're buying your supplies there. So you might as well buy your groceries while you're there, right? Calculate your mileage. Bill your customers. Do I have to say this? Bill your customers. Don't forget. Give them plenty of time to pay. Make sure your customers are paying you. All you service people, make sure your customers are paying you. Up front, get a deposit. Right? Make sure they're paying you. Don't work for free. It's very easy to get, I can't say it because I'm being recorded, but it's very easy for people to do you dirty if you're doing service work. So anyway, pay your bills. Pay your suppliers, because if they decide to stop selling to you, you're out of business. So pay your suppliers, take care of it. And then check for deadlines. Like, is it a tax deadline? Do you need to file franchise tax? Do I need to file, there's lots of stuff you have to do. So check for deadlines, make sure nothing's coming up, all right? All right, software choices that aren't QuickBooks. I've been with QuickBooks since 1997. I used to love them. They have changed the business model of their company, and I don't love them anymore. And I'm trying to be nice. They're not my favorite people anymore. So I have been trying a whole bunch of different softwares. I have used all these. Xero, I just did a trial with them. I moved a couple of my customers to Xero that I do their bookkeeping for. I'm kind of loving it. It's not free. It's cheaper than QuickBooks, but it's a lot more intuitive. It's a lot easier to use. And I think they have better like help. Like if you don't know what you're doing, it has like a lot of pop-up help. And they don't try to sell you stuff, and they're not trying to like sell you merchant loans. And I mean, they just keep your books. I like them. I really like Xero, Xero. Wave, and that is not Wave the money transfer program, the Wave app. It's for sending money to your friends, like, and that's not that one. It's waveapps.com. That's free. If you want to use the AI Snap feature, it's $16 a month. But if you don't have a lot of receipts, like paper receipts and things you need to snap, and you just have a few transactions, Wave is free. And I love Wave. Wave's been free for 15 years. 15 years it's been free. I love Wave. FreshBooks. If you are, no photographers? Wedding people? Construction people? No. Okay. Anybody that has complex billing, FreshBooks, or there's also another one called HoneyBooks. If you have it where you're billing somebody and you need a deposit, and then like they need to pay the deposit, and then you're like, oh wait, no, I don't want to do it this way. You have some artists here. I've got a music teacher back here too. You might want to look into FreshBooks or HoneyBooks too. Neither of which are free, but they do keep up with your billing, and they constantly remind, oh, you paid this week, you didn't pay last week, well, you did pay this week, oh, you paid double last week. It keeps track of all that. And it's like, oh, I want to do something extra. Oh, I want to change this. Or, oh, wait, I want to modify what I bought from you. Okay, FreshBooks, HoneyBooks, that's what they're built for. Constantly changing complicated billing where the customer's always changing their mind. They do the other accounting too. But if you have complicated billing, like if you're not just running a point of sale system or Square or just invoicing people, if you have complicated billing where people pay you in installments, you might consider FreshBooks or HoneyBooks. HoneyBooks is not on here. I forgot to put that on there. And then there's good old Excel. I have a great Excel sheet. If you have like a couple transactions a month, you really don't buy that much stuff, you're just starting out, you just want to keep track, I can send you an Excel sheet, just let me know. I'll forward you an Excel sheet. It does it by quarter, gives you everything you need to know, adds it up, super simple. It doesn't do anything fancy, it doesn't make reports, but if you like Excel, super duper easy. All right, down here at the bottom, Everlance, free mileage app. I looked yesterday, it's the only one I could find that actually works and is free. So you put Everlance on your phone, no credit card, no nothing. You put Everlance on your phone, it will have the GPS on all the time. It tracks where you are. You just have to go in and say, okay, this was business, this is personal. Business, personal. You have to sort out the trips by hand, but you're not going to forget any. It tracks everywhere you go. So especially if you're doing a lot of stuff on site, or you have to go to a lot of places to pick stuff up, like you're constantly going back and forth to Walmart. I don't know where you buy your stuff, where you go, but yes, ma'am.
It's going to the studio or the office. Is that
Very good. The question is commuting to your primary place of work. I didn't say that. I forgot you had a studio. Is commuting to your primary place of work a tax deduction? No. Everybody drives to work. You cannot deduct going back and forth to your office. Sorry.
But if I visit like site-specific locations, then yes.
Now, if you're going other places, absolutely. Absolutely. No. I have got 12 minutes left. And it's been fun, but I still have like 9 million slides to go. I don't want to get too much into pricing your product. It was kind of a longer thing that I kind of did with Maker to Market. I'm going to go through the first slide. We're going to skip through most of these. 3 main things in pricing your product: the market, your costs, and your customer. If you are a commodity, if you are the same as everybody else, if you are selling good old 10-penny nails, nobody cares where your 10-penny nails came from. If that's what you're selling at the hardware store, nobody cares where they're at. You're going to sell the same price. You're going to sell them for the same price as everybody else. The market's going to set your cost. If you are selling something completely different, something niche-y, something that nobody else has, then you can set your price wherever you want. So think about that when you're looking at what you're selling, how you're selling it, how to bring it to market. If you are selling products, you want to make it something so different that people don't consider you a commodity and you're not stuck. The only price you can sell at is the same price Walmart sells it at. And you're never going to be able to cover your costs. That's the other thing. Your cost, uh-oh, she's coming in to throw us out.
No, I got it free from the desk.
It's almost 7:30, you know? Okay. All right, she's not throwing us out yet. We got a few more minutes.
No.
Okay. Your costs, right? You got to cover your costs. And part of your costs, the one thing everybody forgets, what's the most important thing you need to consider in your costs when you have a product and you are pricing your product, or a service for that matter too. She's good. I like her. Your labor. Remember we talked about you got to make enough money to pay you? If you're sitting here making something and it costs like, 50 cents to make it, there's not that much in it, right? But it takes you an hour and a half to make each one. How much are you making an hour? You going to work for $2 an hour anywhere else? Don't work for $2 an hour for yourself. You need to consider all your costs and your price and your product. You need to see how much it's really putting into it, including a fair wage for you. And a fair wage isn't $2 an hour. You need to really think about how much time it's really time you're putting into your stuff, and make sure you're getting paid to work there. Okay? Yes, ma'am.
I have a question on that.
Yes.
So in that scenario, the gadget that you're making is 50 cents.
Right.
And let's say that you're setting your first year, you're saying, I'm going to set my hourly rate at 20.
Okay.
In this scenario, right?
Right.
And it took you 2 hours,
Right.
right? I get that. What if you're experimenting and that experimenting took you 8 hours to make the gadget, but as time passes, eventually you're going to knock it down to 2 hours?
Right. Okay, that's experimental stuff. That's the cost of doing business. That's the cost of, that's just what it costs to develop your product and get it to market. And that's just a sunk, that's a sunk cost.
You're knocking yourself out of the market.
Right,
Well,
that's the
you're
other
doing
thing.
You're doing the experimenting or
Right.
trying new things.
Yeah, you're not going to be able to get your money back. When you're still experimenting and you don't have a method to making your products, like you're going to do this, and it's going to be the same way every time. You're going to make a consistent product and you have a method, and you can teach somebody else that method, right? I mean, when you get to that point, that's the point where you want to make sure that you're factoring, when you're coming up with a price at that point, you want to factor in how much time does it take? If I was paying an employer or I was paying me, if I'm doing it or somebody else is doing, you got to make sure there's a fair wage in there with that product, and that's why it's hard to beat. Now, the other thing I said is the customer. If you're, like we were talking before, I don't know what everybody's making, I don't know what direction you're going, but if you're going to go into the scale up and you want to, do one of these big scale up programs here, and you want to put your shelves on a product of like a Walmart or a Target or something like that, there's companies that help you do that. But I'll tell you, when you're making your stuff and you want to, I got people that won't go to Walmart because Walmart's saying, all right, I'll take 100,000 of them and I'm going to pay you $5. I need 10 to cover my cost. Too bad. Fix your process and get it down to 5 and we'll take 100,000 of them. Like, that's the way Walmart is. They tell you how much they're going to pay. So sometimes it's the market, most of the time it's a market, but your cost and occasionally your customer. So I don't know what direction everybody's going. Not everybody wants to like scale up and get into Walmart. Most people don't. I'm going to have to go over a few of these slides. I think I covered most of this. Pricing your products, labor, material, figure your costs. I'm not going to get too much into this. Here we go. Subjective stuff. I got 2 slides real quick on this. This is another thing I say all the time. Your passion is now production. Remember I was talking earlier about it's not all about the money. It's kind of all about the money. The IRS thinks it's about the money. The bank thinks it's about the money. But it's not really about the money. You got to get up every day and do your job. And if you're self-employed, you got to get up every day and love your job. Because if you don't love what you're doing, you're going to hate what you're doing real quick. It becomes production. Did anybody watch Big Bang Theory?
Yeah.
I don't watch a whole lot of TV, but man, I tell you. Okay, there's an episode where they're making penny blossoms, and she got orders for all these penny blossoms, and like all her friends stayed up all night, and they get them order out, and they got it, and and it's like, oh, they just ordered another 2,000, and they're like, bye. Okay, we're not your friends anymore. Okay, you can't, like, you have to be able to, like, it gets to be work. You're gonna have to stay up all night and meet deadlines. You're going to have to travel out of the country and miss somebody's birthday. You're going to have, I mean, it gets a drag. So if you don't love what you're doing, it gets to be a drag. And if you're doing something, like if you hate cold calling people and you hate selling stuff, maybe you should partner with somebody who loves selling stuff, you know? If you hate doing paperwork, get an accountant, get a bookkeeper. Don't hate doing paperwork and wait until you're one of the 60 people on my list, not the good list, that have to file their taxes in 3 weeks, and I still don't have their information. Yay. Okay. This is what they call a balanced scorecard. I'm going to skip over this, but it's like you have to love what you're doing. So I give everybody that advice. If you really don't have a whole lot to do with taxes or anything else, we have got 5 minutes. There's no way I'm going to cover all this. We're going to go over, and I will not leave until I answer all your questions. Okay? I'm going to go through these as fast as possible. Taxes, get income tax. We talked about that, right? That's your profit. Remember, we talked about profit and loss. If you have a profit, you income tax on your profit. You also self-employment tax on your profit. I think we covered all this earlier. Okay. Now what? Well, I'm not going to get into this. Is anybody doing any kind of technology? Developing software, developing methods? No. Okay. Franchise tax. If you have an LLC, I'm sure some of you already do. Who hasn't? Anybody already have an LLC set up? You do? Couple. May 1st, your franchise tax is due. That has nothing to do with your business. Remember, an LLC is just a box. Just for leaving that box in existence costs $150 a year on May 1st. So if you have not paid your franchise tax, you can look it up on the Secretary of State website. Arkansas Secretary of State, plug in your name. It's a corp search thing like that. It says search for corporations or search for names. And make sure that your franchise tax is paid. If you haven't paid it, it will say revoked. Get yourself unrevoked by paying it. Commercial property tax. If you're working at home, they may not catch you, but technically, if you have any kind of business, you are required to pay property tax on all of your business assets in the state of Arkansas. The minimum thing that they want to see reported is a minimum of $25 in supplies and a computer or a phone or a tablet. And if you report those things, your tax for the whole year will be about $3. So highly recommend going to the county courthouse or going to if you're all in Washington County, county courthouse is right here on the corner, College and Dixon. You can also go to the Washington County Courthouse online and assess your business personal property by May 31st. We're a little late. Do it next year. It's for the prior year, or it's actually for what you have on May 1st. So if you haven't done it this year, just register your business personal property. When you go to register your car, just tell them you have a business, fill out the form. It's really simple. I also have a blog on that covers every line of the form. Okay. Sales tax. We've got to talk about sales tax. If you are selling things, right? If you are selling things, we have people here selling things. If you are selling things, over here, with the artist over here, I'm sorry, I didn't catch your name. Asalia. Are you doing commissioned artwork? You're doing commissioned artwork. Okay, this does not apply to you. Artists doing commissioned artwork are not required to collect sales tax.
This is like services provided.
Yeah, more or less. They don't, because you're not really selling products. You're selling something that somebody committed. If you're doing commissioned artwork, they don't require you to collect sales tax. If that's all you're doing.
No, but I'll be producing, so like ceramics, so pottery and stuff along those.
So if you're doing pottery and stuff and selling that somewhere else, you probably should think about a sales tax permit. If you are selling on Etsy, if you are selling on eBay, if you are selling on Amazon, or anywhere else that way, where you are selling on somebody else's big website, they're collecting and remitting the sales tax for you. You just get a check, right? If you are selling on your own website and using Stripe, Square, something like that, and you are collecting the money and the credit card deposits come into your account, you do need to collect and remit sales tax, okay? I highly suggest you contact me, and we can go over this on a case-by-case basis because it takes me a while to kind of go through all the rules. But if you are selling things, you absolutely need to be collecting sales tax and sending it into the state every month. I've talked about this before. They're the meanest people in the state. You don't want to mess them up. Every month. If you collect it from your customer, it's not your money. You are collecting it on top of what you're collecting from your customer. You're working as an agent for the state. You collect the state's money and you send it to them every month. It's not something you settle up once a year. You got to pay it by the 20th of the next month. You hold it for a good 20 to 45 days. Makes a nice cushion in your account, but it's not your money. You have to send it in. Oh, my alarm's going off. Sorry. Okay, so questions on sales tax, please contact me. If you are selling things, if you are mowing, anybody mowing? No. No photographers, we already covered that. No photographers. What are my other service people doing? Got a music teacher? What do you do?
I have a marketing agency, so I provide services. with
Marketing
clients.
service, okay. Marketing,
Tutoring?
tutoring, music teacher. Okay, everybody else is doing products. Okay, none of your services in here are taxable, so you're all skip the sales tax. If you are selling things, you really need to consider talking about sales tax. Again, if you don't want to call me and talk to me, look at my blog, of course. I have lots of good articles on how to pay sales tax. And again, they're not kidding. It's the state's largest source of income. They do not mess around with sales tax. All right, compliance issues. This is the last slide. Last slide, I think. I think it's the last slide. Yeah. Compliance issues. We haven't talked about payroll because I don't think anybody has any employees yet. That's another issue we need to talk about at some point if we start hiring employees. But right now, you're probably just going to, if you hire anybody to work for you, they're probably just going to be a contract labor for a while, 1099s. If you pay any person over $600 to work for you, $600 for the whole year. So $100 here, $200 there, $50 here. $600 for the whole year, you are required to send them a 1099 at the end of the year. How do we do that? You could ask me. At the end of the street here, look up in the building. That big building at the end there on the square, it says Zenwork. They're a national company. I just saw them at one of the national tax forums as a vendor. I'm so proud of them. They've only been in business about maybe 7, 8 years. They're a huge national company now. They're a website called Zenwork. If you look it up online, you can do 1099s online. They send it to the person, they send it to you, they file it with the IRS, and I think they charge like $3 a piece. Very reasonable. Best company out there, and they're literally right here at the end of the street. It's called Zenwork. Insurance, we talked about insurance. We already talked about insurance. If you're going to go buy insurance, do not go business insurance. Do not go any place that has the name of an insurance company on the door. They will be the most expensive and the least helpful, okay? So you do not want to go to a building that says State Farm on the door or Farmers or anything like that. You want to go to like John's Insurance Company. Call them up, say, hey, do you do business insurance? And be like, yeah, we're comp, we get liability, we get product liability, we get this, you know. It's a completely different world than car insurance and life insurance. And, you know, so go to an independent insurance agent if you want business insurance. They put out bids, they go to any company, they put out bids to all these different companies, and they get you the best policy for your situation at the best price, okay? So don't just go to whoever sells you your car insurance and say, hey, I need business insurance, because you will not get a good deal and you'll probably not get good coverage, okay? Talk to an independent insurance agent that's not attached to a company, okay? Lots of them out there. They all know what they're talking about. Last two things, city business license. You are required to have a city business license if you are working at home in Fayetteville, Springdale, I believe Johnson, most of the towns around here. Some of the really small towns don't have a city business license program or don't require home businesses to register. A couple of towns don't, but Fayetteville does. I think it costs like $20 to register. It's not a big deal. There's a City of Fayetteville. Yep, City of Fayetteville has a web page. Springdale has a web page. If you live outside the city limits, you are not required to have a city business license. It is only if you live inside most city limits.
How about Farmington?
I don't know, but you can find out real easy. But make sure you don't need a city business license. And I always tell everybody, just comply. You know, register to pay commercial property tax. Get on there. The county will know who you are. Get a city business license. The city will know who you are. You're going to start working your way up here. People are going to know who you are. That's what makes you look legitimate. You know, you're complying with this stuff. You're paying this stuff. They're going to see you. People will see you. Okay? Last thing, zoning. This is another one of my favorite stories. I have a story for everything. Guy fixes motorcycles, decided to retire. He was just going to fix motorcycles in his backyard in a cul-de-sac. He's like, yeah, I got this new garage built. I'll just fix motorcycles at home, right? And I'm like, do you think your neighbors are going to like that you're working on Harleys are loud, right? We all know Harleys are loud. We live here, Bikes, Blues, and Barbecue. We all know Harleys are loud, right? He's going to fix motorcycles, Harleys, in his backyard. If you lived next door to him, what would you do? I would have the zoning board all over him like white on rice. I do not want that. With my kids playing in our front yard and these bikers coming, like, no. Okay, no. Okay, zoning is, your neighbors don't like what you're doing. So, most important, don't make your neighbors mad because they can shut down your business. Okay, so I would not have customers coming to your house if you're working at home. Bad idea. If you have people coming to your door, in and out, all times, day and night, you know what your neighbors are thinking, okay? You're selling something you shouldn't be selling, okay? You don't have people in and out of your house all hours, day and night. If you have customers, you want to meet them somewhere, meet for coffee, have your transaction somewhere. Do not have your customers come to your house. Do not have people pulling in and out of your driveway. I actually had a problem years and years ago where we had to get deliveries, but they wouldn't deliver the deliveries in like a UPS truck. They kept coming up the street with a tractor trailer. And the road was like, and it was inside the city limits, and the street was like this wide, and the tractor trailer was like this wide, and yeah, I had to move. We decided to move our business and move our home and move our business to someplace outside the city limits because that's the only way we could get a tractor trailer to deliver to our house. Sometimes businesses grow faster than you think, and yeah. So anyway, zoning, do not make your neighbors angry. They will, don't make your neighbors angry. So if you are zoned in a residential area, you probably want to, so now they're throwing us out. Now they're coming to the door to throw us out. Okay. I think that's all my slides. I know oh, wait. Oh, look, I got the Fayetteville Public, I actually got one. So thanks to the library for having me again. You guys have been great. I've had such good questions. Okay, grassroots taxes, right there at the bottom of the slides. It's also on there. Do not hesitate. Look me up. I'm on like literally everything, Facebook and Instagram and YouTube, website. I got the blog. Make sure you check for all my stuff. If you have any questions, do not hesitate. My number's on everything. My email's on everything. I don't answer the phone. The phone is not answered. But text or email me anything, set up a meeting. I'm free to talk to you guys whenever. I love helping new businesses start out. And thanks for coming, and sorry I went so far over.
Thank you. And this did get recorded, by the way. I didn't know if it would get recorded
He told
or not,
me.
but I just looked and it.
He said it was being streamed, so it was being